Imagine building a financial legacy so strong that your great-grandchildren will benefit from decisions you make today. What if I told you that the ultra-wealthy aren't just lucky? They follow specific wealth-building principles that anyone can learn. Today, I'm revealing 6 powerful strategies to create generational wealth, the kind that lasts for decades after you're gone. The 4th strategy completely changed my approach to investing, and the 6th is something 97% of people overlook completely. Welcome back to the channel where we break down wealth-building strategies into actionable steps. Generational wealth isn't just about having money. It's about creating lasting financial security that transcends your lifetime. The wealthiest families in history have used these principles to maintain and grow their fortunes across multiple generations. Today, I'm breaking down exactly how you can apply these same strategies regardless of your starting point. Strategy 1. Strategic real estate investing. The first pillar of generational wealth is strategic real estate investing. Unlike other assets, properly selected real estate provides multiple wealth-building mechanisms simultaneously. Appreciation. Property values historically increase over time, averaging 3 to 5% annually nationwide since the 1940s, outpacing inflation. Cash flow. Rental properties generate monthly income that can exceed your mortgage and expenses, creating positive cash flow. Tax advantages. Real estate investors benefit from numerous tax deductions, including mortgage interest, property taxes, depreciation, and operating expenses. Leverage. Using other people's money through mortgages allows you to control valuable assets with a fraction of the purchase price up front. Principal pay down. As tenants pay rent, they're essentially helping you pay down your mortgage, building equity month after month. The key is focusing on cash-flowing properties in growing markets rather than speculative investments. Look for areas with strong employment growth, population increases, and infrastructure development. For beginners, house hacking, living in one unit while renting others, offers an excellent entry point with lower financial barriers. As your portfolio grows, consider establishing a family real estate LLC that can be passed down to future generations with favorable tax treatment. Strategy 2. Business ownership. The second cornerstone of building multi-generational wealth is business ownership. Approximately 70% of millionaires own their own businesses, and for good reason. While employment exchanges time for money in a linear relationship, business ownership allows for scalable income, the potential to grow revenue without proportionally increasing your time investment. Asset creation. Building a sellable asset that can provide substantial liquidity when transferred. Tax optimization. Businesses have access to numerous tax advantages that employees don't. Family employment. The ability to legitimately employ family members and begin wealth transfer early. Estate planning opportunities. Businesses can be structured for optimal succession planning. Starting doesn't require massive capital. Many successful businesses begin as side hustles with minimal investment. Focus on sustainable business models that solve real problems rather than chasing trends. Family businesses with clear succession planning have created some of history's greatest fortunes. The key is establishing proper governance structures early and grooming the next generation with both financial literacy and business acumen. Consider creating a family enterprise with clear operating agreements, professional management structures, and regular family meetings to discuss business direction and wealth preservation strategies. Strategy 3. Strategic stock market investing. While many focus on short-term trading, generational wealth is built through strategic, long-term stock market investing. The data is clear. Despite market volatility, the S&P 500 has delivered average annual returns of approximately 10% over the past century. A disciplined approach to equity investing can dramatically grow wealth over decades through index fund investing. Low-cost, diversified funds that track major market indices reduce risk while capturing market growth. Dividend reinvestment. Compounding returns by automatically reinvesting dividends accelerates wealth accumulation. Dollar-cost averaging. Regular automated investing, regardless of market conditions, removes emotional decision-making. The true power becomes evident when viewing investment returns through generational time frames. For example, $10,000 invested in a diversified portfolio with an 8% average return becomes approximately $100,000 after 30 years, $1 million after 60 years, $10 million after 90 years. For generational planning, consider establishing family investment trusts with clear governance rules. These structures can maintain a cohesive investment strategy across generations while providing structured distributions to beneficiaries. Strategy. Por favor. Tax strategy. Optimization. This is the strategy that completely transformed my approach to wealth building. Most people focus exclusively on income while ignoring the enormous impact of tax efficiency on wealth preservation and growth. The wealthy understand that legal tax optimization is perhaps the single most overlooked wealth accelerator. Consider these approaches. Strategic entity structures, using appropriate business entities such as S-Corp, LLCs, and so on to legitimately reduce tax burdens. Retirement account maximization, utilizing tax-advantaged accounts like 401ks, IRAs, and HSAs to their full potential. Capital gains management, strategically timing investment sales to minimize tax impact. Generational transfer planning, using lifetime gift exclusions and estate planning tools to minimize estate taxes. Geographic considerations, strategic residency planning in tax-favorable jurisdictions. For example, by properly structuring business income through an S corporation versus operating as a sole proprietor, you can potentially save thousands annually in self-employment taxes alone. These savings, invested over decades, can add hundreds of thousands to your family's wealth. Working with qualified tax professionals to develop multi-generational tax strategies is not an expense. It's an investment with one of the highest ROIs possible. Strategy 5. Financial education and legacy planning. This strategy is often completely overlooked, yet it's essential for ensuring wealth persists beyond the first generation. Studies show that 70% of wealthy families lose their wealth by the second generation, and 90% by the third. The primary reason? A lack of financial education and proper legacy planning. True legacy planning goes beyond just legal documents and includes family financial education, which is systematic financial literacy training for younger generations. Values-based planning involves clearly articulating family values and wealth purpose beyond just money. Governance structures include creating family constitutions and councils for wealth management decisions. Communication systems involve regular family meetings to discuss finances openly and transparently. Philanthropic focus uses charitable giving to teach financial responsibility and maintain family unity. Start by creating a comprehensive family estate plan with proper wills, trusts, and advance directives. Then develop a family bank concept where younger generations can pitch ideas and receive funding for education or entrepreneurial ventures with clear accountability mechanisms. Remember, inheritance without education leads to wealth dissipation. The most successful multi-generational wealthy families invest as much in developing their heirs' financial intelligence as they do in accumulating assets. Strategy 6. Alternative investments. This is the strategy that 97% of people completely overlook, yet it can provide both significant returns and crucial portfolio diversification. Alternative investments include private equity, which is investing in private companies with the potential for substantial growth before public offerings. Venture capital involves funding early-stage businesses with exponential growth potential. Specialized real estate includes investments in commercial, industrial, or specialized residential properties. Intellectual property involves creating or acquiring patents, copyrights, or royalty streams. Collectibles and tangible assets include the strategic acquisition of art, rare coins, or other appreciating collectibles. The wealthiest families typically allocate 15 to 30% of their portfolios to these alternative asset classes. They provide both diversification from traditional market movements and opportunities for outsized returns. For example, early-stage venture investments can deliver returns of 10 times, 20 times, or even 100 times initial capital, though with higher risk profiles. With proper research and diversification, even modest allocations to these alternatives can significantly enhance multi-generational wealth growth. Consider starting with smaller allocations through platforms that have democratized access to previously exclusive investment categories. Building generational wealth isn't about getting rich quick. It's about implementing sustainable strategies consistently over time. The 6 strategies we've covered today: strategic real estate investing, business ownership, stock market investing, tax optimization, legacy planning, and alternative investments, form a comprehensive approach to creating wealth that can last for generations. Remember that true generational wealth isn't measured just in dollars, but in the financial security, opportunities, and values passed to future generations. If you're serious about building a financial legacy, start implementing these strategies today. Begin where you are, with what you have. Consistent application of these principles, even on a small scale initially, creates the foundation for exponential growth over generational time frames. If you found value in these strategies, make sure to subscribe to the channel for more wealth-building content. Hit the notification bell to stay updated on new videos. Let me know in the comments which of these strategies you're most interested in implementing first, and what other wealth-building topics you'd like me to cover in future videos. Thank you for watching, and I'll see you in the next video.